Hi, welcome to this session on journal entry for GST sales and purchases. Sales and purchases forms the major part of transactions in a business concern. For a concern which is registered under the GST law, all the sales and purchases will have GST impact also. Therefore, we need to know how to pass journal entries in this scenario. Let us consider these four transactions to learn the entries. Before getting into how to pass the journal entries, let me first give you a basic idea about GST on sales and purchases. First of all, goods and services tax, that is GST, is an indirect tax. It's an indirect tax. It is charged on sale of goods or on provision of services. Whenever we sell goods or provide services, we need to pay indirect tax, that is GST, to the government, which we will collect from the customer itself by raising a tax invoice. So, the tax which we collect from our customer is a liability which we need to pay to the government. Therefore, whenever there is a sales, we have GST liability. Let us term this as output GST. On the basis of location in which the seller and buyer are situated, the sale of goods or provision of services can be classified into two. It can be classified into two. Number one, intrastate sales, and number two, interstate sales. Intrastate sales is the scenario where buyer and seller are from the same state, whereas in interstate sales, the buyer and seller are in different states. Now you may have a doubt. What is the need for classifying the sales as intrastate sales and interstate sales based on location of the buyer and the seller? We do so because for intrastate sales we charge CGST and SGST equally. We charge CGST and SGST equally, and for interstate sales we charge IGST. If you see in the first case, that is on 1st June 2020, we are rendering services worth Rs 1 lakh to Mr. Shiva, who is from Chennai, that is in the state of Tamil Nadu. The supplier of service, Mr. Sam, is also from Tamil Nadu. Therefore, this is an intrastate provision of service. So, CGST and SGST needs to be charged. Since the value of service is Rs 1 lakh and the tax rate we have assumed it to be 18%, the total GST liability is Rs 1 lakh into 18%, which results to Rs 18,000. This 18,000 should be equally allocated between CGST and SGST, as this is intrastate provision of services. Whereas in the third case, that is on 15th June 2020, we are rendering services worth Rs 1 lakh to Mr. John of Trivandrum, that is in the state of Kerala. But the service provider, Mr. Sam, is from Chennai, which is the state of Tamil Nadu. Therefore, this is an interstate provision of service, and as a result, IGST of Rs 18,000 needs to be charged. Now let us consider the second and fourth transaction. In these two cases, we are availing the services of Mr. Ram and Mr. Prem. Whenever we avail services, we need to pay for the service along with the GST charged by our supplier. That is, here Sam is receiving services from Mr. Ram and Prem. So, Mr. Ram and Prem will be charging their fees along with the GST. This GST paid is called as input tax credit. This is an asset and we can claim this as a credit when we pay our liability. So, for a GST registered concern, we need to account for the output tax liability and the input tax credit. So, we need few additional ledgers. So, let us have a look into the additional ledgers we need to account for GST. So, the ledger accounts which we need for GST purpose. With respect to the output tax liability part, we will be having three ledgers. Number 1, output CGST. Number 2, output SGST. And number 3, output IGST. These three are for the output tax liability. And with respect to the input tax credit, we will be having another three ledgers. So number 4, input CGST, input SGST, and input IGST. These 6 ledger accounts are essential for accounting sales and purchases in GST scenario. With this basic idea, let us move into passing the journal entries. So our approach would be, first, let us know about the transaction, and then let us learn about how to pass the journal entry for that transaction. Let us consider the first transaction. On 1st June 2020, Sam Consulting rendered services worth Rs 1 lakh to Mr. Shiva of Chennai. From the transaction, we can see that the services provided amounts to Rs 1 lakh. And we have seen that this is an intrastate provision of services. So we need to charge CGST and SGST. Since the tax rate is 18%, 18% of 1 lakh would be 18,000, which needs to be equally distributed between CGST and SGST. So for this 1 lakh, the GST liability is Rs 18,000, which needs to be bifurcated between CGST and SGST, Rs 9,000 each. Since we are providing services, this is an output tax liability. So let me use the words here, output CGST and output SGST. Therefore, while raising invoice to Mr. Shiva, Sam will raise the invoice as follows. Value of service provided Rs 1 lakh. CGST at 9%, Rs 9,000. SGST at 9%, again Rs 9,000, and total invoice value Rs 1,18,000. Now we have analyzed the first transaction in detail. This will help us to pass the journal entry much easier. So here, if you see, this Rs 1 lakh is income. This 9,000 and this 9,000 is a liability. So this entire thing we need to recover from Mr. Shiva, who is in debtor. So this 1,18,000 rupees is recoverable from Mr. Shiva. The resulting journal entry would be, we will debit Mr. Shiva. So Shiva account debit the entire invoice value Rs 1,18,000 to the income consulting income account, this 1 lakh, to these both are output tax liabilities. So we will be using the ledgers output CGST and output SGST. So to output CGST account 9,000 to output SGST account 9,000. Therefore, we have passed the journal entry for the first transaction. Now, let us move to the second transaction. On 1st June 2020, again on 1st June 2020, he is availing services worth rupees 75,000 from Mr. Ram of Chennai. Again, this is an intrastate purchase of services. So let us analyze this transaction. First, the value of service received rupees 75,000. Now the provider of service, Mr. Ram, will be charging CGST and SGST, which we need to pay, and we can take it as a credit to pay our output tax liability. So for this transaction, the CGST at 9% would be rupees 6,750 and SGST at 9% rupees 6,750. The total bill value, that is, this will be raised by Mr. Ram, who is the provider of service. The total amount would be rupees 88,500. Here this 75,000 is an expense. Let us consider as professional fees. This CGST and SGST are current assets, that is input tax credit, and this 88,500 is due to our creditor Mr. Ram. Therefore, the resulting journal entry would be, we will be debiting the expense first. Say professional fees account 75,000. Since these two are current assets, we will be debiting them, and these are input. So input CGST account debit 6,750, input SGST account debit 6,750 to Mr. Ram 88,500. Third and fourth transactions are more or less similar to the first and second transaction. The only difference is the first two are intrastate sale and purchases. Third and fourth are interstate sale of services and purchase of services. So let us consider the third transaction. On 15th June 2020, Sam Consulting rendered services worth rupees 1 lakh to Mr. John of Trivandrum. So this is interstate sale of services. Therefore, the taxable value is rupees 1 lakh. That is, services provided rupees 1 lakh. We will be charging IGST. So IGST at 18%, rupees 18,000. Total invoice value rupees 1,18,000. Therefore, the entry would be John account debtor, the total value rupees 1,18,000 to consulting income account rupees 1 lakh to, since this is a liability, this output IGST account 18,000. Now the fourth transaction on 15th June 2020. Sam Consulting availed services worth rupees 75,000 from Mr. Prem of Trivandrum. So this is an interstate purchase of services. So the service received worth rupees 75,000. The supplier of service will be charging IGST at 18%, that is rupees 13,500. So in total, the bill value would be rupees 88,500. Now let us pass the entry. We will be debiting the expense service received, that is professional fees. Rupees 75,000. And this is a current asset, so input IGST account debit 13,500 to the creditor Mr. Prem account 88,500. Therefore, we have successfully completed the journal entries for all these 4 transactions. As you can see, for the first transaction, we have charged rupees 9,000 CGST, rupees 9,000 SGST from our customer, and in the third transaction, we have charged IGST rupees 18,000 from our customer. This GST will be paid to the government in the next month. In our case, it's July. So we need to know the entries to be passed while paying the GST liability. While discharging our GST liability, we can avail input tax credit which we have paid to our suppliers. In our case, we can avail this 6,750 of CGST and SGST and this rupees 13,500 of IGST as input tax credit. So let us learn the entry for discharging our output tax liability. So the journal entry for discharging the GST liability. Let us assume that we are paying our tax liability on 17th of July 2020. Before passing this entry, let us take a summary of all the input and output GST for the month of June. So first let us take note of the output CGST. The output CGST is rupees 9,000. Next, output SGST, that is also rupees 9,000. Next, output IGST. Output IGST we have rupees 18,000. So these 3 are our output tax liabilities. Now input CGST we have rupees 6,750 and input SGST also we have rupees 6,750. So let us write here 6,750, 6,750. So input IGST, we have input IGST 13,500. So in total we have output tax liability of rupees 36,000 and we have input tax credit of rupees 27,000. So for discharging this rupees 36,000 output tax liability, we can use input tax credit to an extent of rupees 27,000 and the rest we need to pay in cash. Now we can pass the entry. Since we are discharging our liability, we will be debiting all the output GST ledgers. So output CGST account debit, we have rupees 9,000. Output SGST account debit 9,000. Output IGST account debit 18,000. Since we are utilizing our input tax credits, we will be crediting it to input CGST account 6,750 to input SGST account 6,750 to input IGST account 13,500. So we saw that 36,000 we have output tax liability and 27,000 we have input tax credit. So the remaining 9,000 rupees we will be discharging by paying through bank. So to bank account 9,000. This is the entry for discharging our output tax liability. I hope you have got a better understanding on how to pass journal entries in GST scenario. Please do subscribe to my channel and press the bell icon for instant notifications. Let's make accounting simple.